If we don't do anything, worst case scenario, we don't do anything, everybody will have a tax increase. We know that. The President's told us that. But where those tax increases come from is a little bit under the radar. So one of the sources of tax increase, about 95 billion of it, comes from the fact that the Social Security tax holiday, which we've all enjoyed for the last 2 years, that 2%, is going to go away. So that means everybody who's getting a paycheck, taxes are going to go up. That's number one. And that's independent of the fiscal cliff. That's just a fact. That's going to happen. We've probably got another $110 billion in what we call Bush tax cuts, which is effectively all but the 15% rate will go up by 3 to 4.5, 4.6% percentage points. So, you know, the 25% rate that now cuts in at $68,000 of taxable income for a married couple will now go to 28%. The 28% rate goes to 31. The 31 goes to 35, and the 35% rate goes to 39.6. So all those rates go up. The rate on capital gains, which is buying an asset, holding it for more than a year, selling it, and the difference in price for what you sold it for and bought it for, that rate will go from 15 to 20%. Ordinary dividends rate will go from 15 to whatever your marginal rate is, which is potentially 39.6%. And on top of that, there will be a 3.8% surcharge on unearned income for everyone whose AGI is above 350. That is independent of the Bush tax cuts, but that will also come on stream in January 1st of 2013. That's part of the Affordable Health Care Act. And then finally, if that wasn't enough, if nothing is done, we have the sequestration spending cuts, which are about $110 billion. You add them all up, and you get about $450 billion of tax increases and spending cuts. That's about 2.9% of GDP. The economy for the last couple of years has grown at or below 2%. You take 2.9% out of a 2% growth, that's called a recession, okay? And that I don't think there's any disagreement that if we don't do something, if nothing happens, we will have a recession in the first half of 2013. By the middle to end of 2013, the unemployment rate will be back up in the middle 9% range. We'll probably put on a 1.5 increase in our unemployment rate, which will throw another 2 or 3 million people out of work. That's the worst case. Unfortunately, the best case scenario is that the Republican Congress and the President get together, agree to some kind of tax increase on the rich, maybe not the full $85 billion that the President's calling for by the rate increase, but maybe something a little south of that, where we get a little bit of a rate increase and we tinker a little bit with deductions and limit those to a certain extent on the top 2 income tax brackets. The Republicans get some spending cuts on entitlement programs, but not to the extent that we're talking about. But the Social Security tax holiday also goes away. That doesn't even seem to be in the discussion parameters right now. There's no one talking about that. I don't see that there's any particularly strong push on the part of Democrats or Republicans to make that not go away. I would argue we ought to probably just not extend it totally, but go to 1%. So we don't take the full 95 billion, but we take half of that. But best case scenario is something along the lines that Obama gets a little of what he wants in terms of tax increases. Boehner gets a little of what he wants in terms of spending cuts. We're looking somewhere in the $2 to $250 billion impact range. That's 1.5%, 1.75% of GDP. That takes a 2% growth rate and brings it down to less than 0.5%. It's not a recession. Maybe the unemployment rate doesn't change or goes up just a tick or two, maybe to 8.82, something like that. But it doesn't feel very good. But the worst case is, the problem with that is, even at $250 billion of spending cuts and tax increases, you still only dealt with $250 billion of the $1.2 to $1.3 trillion annual deficit projected for next year. So you're still looking at close to $1 trillion deficit even after you do all of that stuff and basically bring the economy to its knees.